Hello again, everyone. Welcome back to the program. It's been a couple days since I made a video, but I wanted to go over something pretty big and substantial. So I was putting a lot of things together. Lots of things going on in the economy, lots of things going on in the news, but let's focus on the economy because I'm the economic prepper. So I wanted to get you information now so you're prepared. You're not scared about what's going to come. We're less than 100 days from November 5th, okay? So there's lots of things that are going to happen between now and that date. We got conventions, that's next week. We have different, there's lots of different things on the political landscape. We're not going to get into that, but there's going to be hints of that are going to affect the economy. So we're about that 100-day marker. We're about 3 months away. As I filmed this in mid-August, we have September, October, November. It's less than 3 months away. So let's talk about a few things that go on in the economy, the things that have been talked about so far, things that are going to come next month, things that are going to happen in the next 3 months, things that will happen before end of January, and get into it. So before I do all that, please, if you could, like, share, subscribe. Really helps out the channel. Really appreciate the time that you're sharing with me, and I'll try to be as brief as I can because I know your time is valuable too. So let's just jump right into it. Number one, the yen carry trade. Now, there's tons of people that have been talking about this. It's a lot going on. Basically, governments are going broke, right? That's the bottom line. Governments are broke. If you think things are bad in your neck of the woods or with your finances, imagine that on a global Western world economy of the scale that you can't even imagine for these countries, okay? So Japan, they are trying to protect their currency just like every other country is. So the yen carry trade has been something that the Japanese have been doing for a decade or longer. They basically keep their interest rates artificially low, like basically 0 to 0.5%. So they're at 0%. So on the global scale, what a lot of big money investors or even countries, what they will do is they will go and they will borrow money at 0%, and they'll put into something else in another country or another investment vehicle to try and make gains, right? And then you have a couple of different whammies. First off, the first whammy that could happen to this, if what could go wrong? And you need to figure out what could go wrong. Like, hey, I'm borrowing at 0%. What could possibly go wrong? Well, one is your investment could go bad. All right. Number two, the Japanese or wherever you're getting your 0% financing could change the rules of engagement and change their rates. Number three, the exchange rate between that currency and the currency you're going to invest in, call it the US dollar, exchange rate from yen to US dollar, could change. Well, all three whammies are kind of hitting right now. So Japanese are trying to protect their currency, so they need to raise their rates a little bit. Well, that's having an impact on the global scale because now you can't get that 0%. You're getting, it's a little bit higher, which you wouldn't think is very much. We talk about 1/4 to 0.5% all the time with what the Fed's doing, and we'll get to that in a moment. But it matters. It matters. So first off, the Japanese are protecting their currency. They're changing their interest rates. First thing, they've been doing that in over a decade. Second thing, the exchange rate between the yen and the dollar continues to get worse, right? You get fewer and fewer dollars for your yen. So that's not good for borrowing that yen and converting it to dollars and investing in the dollars. Third, the investments aren't doing well. Yes, the S&P's been trickling down. Commercial real estate's got a problem. Real estate has a problem. Investments have a problem. Everybody's going broke. No one has any liquidity. No one has any currency to buy anything that they want to do. So how is this going to play out? So that's the yen carry trade. So a lot of people like JP Morgan and Jamie Dimon are saying it's 50%, 75% unwound, which means played out. I'm not buy that for a minute. You never, like, Jamie Dimon is the Jim Cramer of banks. Okay, do the opposite of whatever he says, and you'll probably be better off. Same thing for Jim Cramer, and same for Jamie Dimon. Jamie Dimon, especially in the world of crypto, been two-faced for years. He used to tell his brokers, I don't want to see any crypto. I don't want you offering crypto. In the meantime, he was buying crypto. He's buying Bitcoin, and now he's like, oh, we like Bitcoin. Well, you've been lying about it for years. So, okay, so that's the yen carry trade. So now all right, so we're in mid-August. Now, obviously the political landscape is changing and evolving dynamically in the United States. We have a convention next week. Who knows what's going to happen? We may have, Brandon may come back. We don't know what's going to play out. We don't know how that's going to happen. We know that the like their current cast of characters that they're trying to put forth, it's not going to play out well. So we got that. But we got the convention next week. We've got who knows how that plays out. Politics aside, we have the Fed meeting in September. Now, a lot of people were expecting rates to be cut by 1/4 of a point. That will, this affects the bond and the investments. The Fed is in a bad spot because if they raise, if they can do one of three things: up, down, or stay the same. If they go up, that's not expected, so we kind of take that off the table. That was probably, you would raise rates when you think that the economy isn't doing well. Well, this is where the politics comes back in. The current the current leadership wants to depict and make you think that we're in a good economy. So the last thing you want to do is raise rates 2 months prior to November 5th and say, well, maybe we're not in a good economy. So they take that possibility off the table. Second possibility is that the rates stay the same. That's somewhat likely. Okay, that's somewhat likely because they are between a rock and a hard place. But a lot of people, a lot of experts are saying their 1/4% is going to be a drop. First drop in a while, which is even further indication that, hey, we're on the right track and we're now trying to cool off a hot economy. Not buying it. But if you drop rates, that hurts bonds. That will hurt the bond market, which is part of that yen carry trade, because the reason that the Japanese and even the Chinese are but especially the Japanese, because they buy a lot of our debt. The way that the U.S. government finances everything is they sell bonds, which are debt instruments. That's basically we'll pay you in the future back with interest if you give us money today. That's what a bond does. Those auctions have not been doing well. What they do is I think it's the Treasury creates a bond, and if the buyer of last resort is the Federal Reserve, which is basically buying your own debt, which is the games that they play. But ideally, they want another country to buy this. So basically saying, buy our bonds, give us some liquidity, give us some currency for us to operate and spend like idiots, like out of control. Kind of the opposite of what Elon and DJT were talking about the other day, about having a committee to talk about and review government spending and making sure that they're not just spending ridiculously. So again, bringing it back to the example of, imagine there's 20 houses on your street, 15 of them are hurting. Okay, 15 of them are hurting financially. They're having trouble making ends meet, as most Americans are today. But the Americans are doing it. Not only just the Americans, but all of Europe, a lot of Japan, even China, a lot of these countries across the globe are having trouble making ends meet on the global scale because their debt are too high. Their GDP, their gross domestic product, is not high enough to account for this deficit spending that they all do. And you can get away with deficit spending if you're going to grow the economy faster than your debt. So that's kind of like if your house goes up in value faster than your mortgage payments or go up, or your interest rates, you can win in the long run. But these games are all unwinding because every country is broke. So how do I see that this plays out? Well, our former president from 4 years ago has said that don't you dare raise rates because that'll just wreck the economy. The powers that be that are currently in there are ready to blame anything on the former president. And I'm choosing my words carefully, and you know how YouTube is. So 45, you know who that is. Brandon, you know who that is. So Brandon is rooting. Brandon wants to paint this picture of a good economy, and he also, I think, he wants to get back in the office. I don't know if that's going to happen or not. We have his Veep that wants to get in there too. She picked an even more radical Veep than her. That's not going to play out well. Who knows what will happen in Chicago next week? Stay tuned for that. There will probably be more false flags and lots of other indications. But the point is this. The economy is going to go south in the United States at some point between now and February. Okay? Get ready for that. Be prepared for that. Be prepared so you're not scared, because it will go south between now and February. That's 6 months. August the 8th month, February is the 2nd month. That's 6 months difference. Now, I give that window because a lot of things can happen over that time frame. First off, we're supposed to have new leadership installed in January, okay? and they're also supposed to be voted on in November. And so you have a convention next week. You have interest rate changes in the Fed in September, probably another one in October. I don't know when it's going to be in quarter 4, but they'll probably just do something. And then you've got what's happening, January 20th, January 6th, all those different days that are happening in January of significance in the United States. I can see it. The most likely scenario that I see is that 45 wins again. They do whatever they can to keep him from taking office, because if he takes office, then they really, like the current leadership, they're going to get torched after January. It's not going to go well for them. So what they want is they want to keep 45 from getting that seat of power again. So how can they do this? Well, they can play this game of let's make the economy look good for another 3 months, which on the big scale things, like it sounds like it's really hard to do, but they've kicked the can down the road for a long time. 3 more months is not that far. They could probably get away with it and pull it off somehow. But if they lose, if 45 wins in November and they can't delay the election or with a monkeypox nonsense or anything else like that, then they are probably going to allow the economy to tank between November and January and blame it on 45. And then they'll do something, who knows what, to try and keep him out of getting back in that chair. So there's lots of different timelines that can play out between now and February. The economy could go south before November, which I think 45 is kind of hoping for, and has talked about the market going south under Brandon. And we've seen that happen, and we saw that happen a couple weeks ago. May happen again. That is, I'll give that about 15% chance of happening. The economy going south before November. The economy could go south between November and the end of the year. I think that's about a 35% chance of happening. And then if come January, that's probably January, February is probably a 50% chance. But it's going to happen before 45 gets the keys back of running the show again. So this is what happens when the dollar dies. And it's not going to happen overnight. The dollar doesn't die overnight. We're not going to be using Bitcoin. We're not going to be using silver and gold, in January or February. That's not going to happen. But what is going to happen is the economy is going to just overheat, implode, and we've got commercial real estate that's doing horribly. And if you don't know, commercial real estate has to refinance every 5 years versus 5 to 7, maybe 10 if you're lucky. Not 30-year mortgages, which is typical for the United States, but other countries typically don't have 30-year time frames. And but real estate has been struggling a lot of cash deals mostly right now. But there's a lot of houses on the market, especially in the Southeast or the South in general, and they're not moving because mortgages have doubled, and you can't afford the payment. It's kind of like when you walked in that car's dealership, they say, when the salesman says, what kind of payment can you afford? He's trying to tailor a product to get you to get out of there with that car. And automobile sales are bad too. And credit cards are bad. Everything is bad. If you could pick something in the economy, it's probably bad. All right. So and sometime in the next 6 months, it's going to unwind. It's not going to look good. It's going to be bad for everybody. And then, 45 is going to have to fix it. And I think he's going to fix it. And this is what I see playing out. So the next 6 months, the economy is going to tank. I don't know if it's going to be next week or 6 months from now. But the next 6 months, it's going to play out. That prices are going to get lower. I know that good deals are already been popped up. I see it. I'm on X almost every day now. And follow me there. I'll probably post this video on X as well. But the economy is not going to do well. The car sales are doing poorly. House sales are doing poorly. Commercial real estate is doing poorly. Businesses are closing. I'm right here at an office complex, and I'm just recording this, and people are lining up to try to get positions. I'm not here for that, but I see what's going on, and it's a weird dynamic right now. Even in Arizona, where things are doing really well, it's still not great. All right, everybody's hurting across the country. And everybody's talking about groceries. Everybody's talking about gross electric bills. I saw today that 34 cents per kilowatt hour in California, while other states are in the 10 to 15 cent range. more than double your power cost in California. How can anybody live on that? How can anybody survive or operate a business on that? Can you imagine if I mean, imagine Tesla trying to like charging your car at 34 cents a kilowatt hour. Anyway, I digress. So how's it going to play out? How's it going to, like, first off, you need to get out of the dollar system, whatever you choose. Silver, gold, Bitcoin. Those are your top three options. Whatever mix you want, not financial advice, but it's pretty obvious that the dollar is declining in purchasing power. That's happening with all currencies in the Western world. Now, if you have seen number 45, if you've seen his 20-point program, I tweeted this about items number 3, number 6, and number 9, interesting numbers, all kind of lead in my mind to getting rid of a lot of taxes, possibly even the IRS. So anyway, sorry, getting a text coming in there. A lot to be said. So the economy is going to be bad in the next 6 months. It's going to be buying opportunities if you're in a cash position, if you're well positioned financially. I know a lot of you aren't. So what can you do? Work as hard as you can, get as much income as you can, buy products now before the prices go up again, and just be prepared for like 3 or 4 weeks of staying at home if you need to. And, you know, silver and gold are good, so is lead, if you know what I mean. That's something that you might want to hold on to. All kinds of nonsense and monkey business are going to be happening both, you know, between now and the next 100 days. So stay tuned, stay frosty, and leave a comment down below. Tell me what your thoughts are. What do you think the economy is going to be? Hashtag economy. Let me know what your thoughts are. I read every comment, and I'll be talking about lots more different things in the future as we talk about where the economy is going. I will provide, you know, insight onto videos wherever I can and topics. If you have a story you want me to talk about, leave a link to it in the comments below, or let me know how to find it, and I'll do the same. But I'm staying, you know, I'm on zero hedge almost every day. I'm on X every day. I'm trying to stay on top of everything, but things are moving fast, okay? And it's not going to slow down. You're just going to have to buckle up, as I am, and ride through it and just see how this plays out. So, lots said today. Leave a comment down below. I appreciate you taking the time. I know this video is a little bit longer than I usually go, but like, share, subscribe. Help me grow this channel. Help me get a bigger audience. I'm probably going to make another video in a moment about the meetup I went to last night, and we'll talk from there. But, all right, plenty said today. I'll stop there for now. I'll see you next video. Take care.